If you had $10,000 to invest today, would you put it into real estate or into stocks? It's one of the biggest wealth-building debates in personal finance. Some people swear by rental properties. Others believe stocks are the ultimate path to financial freedom. So who's right? Today, we're breaking down real estate versus stocks, which builds more wealth. And by the end of this video, you'll understand the strengths, weaknesses, and surprising truth about both. Let's dive in. The reason this debate exists is simple. Both real estate and stocks have created millionaires. Both have generated long-term wealth. And both have passionate supporters. Real estate investors point to rental income and property appreciation. Stock investors point to long-term market growth and compounding. The challenge is that people often compare them incorrectly. They focus on returns alone. But wealth building involves much more than returns. It also involves risk, time, effort, liquidity, and personal preference. That's why answering real estate versus stocks, which builds more wealth, requires looking at the full picture. Let's start with stocks. One of the biggest advantages of stocks is simplicity. You can start investing with relatively small amounts of money. You don't need tenants. You don't need repairs. You don't need to manage a property. Many investors simply buy diversified funds and invest consistently. The market does the heavy lifting over time. Another major advantage is liquidity. If you need access to money, stocks can often be sold quickly. Stocks also make diversification easier. Instead of owning one property, you can own tiny pieces of hundreds or even thousands of companies. That's a powerful benefit. Now let's look at real estate. One reason investors love real estate is cash flow. Rental properties can generate monthly income. Another advantage is leverage. With real estate, investors often control a large asset using a relatively small down payment. For example, a person might purchase a property worth far more than the cash they initially invested. If the property appreciates in value, leverage can magnify returns. However, leverage can also increase risk. That's something many beginners overlook. This category isn't even close. Real estate generally requires more involvement. Properties need maintenance. Tenants may move out. Repairs happen. Unexpected expenses appear. Stocks, on the other hand, can be remarkably passive. Many investors spend just a few minutes each month managing their portfolio. So if you're asking real estate versus stocks, which builds more wealth, remember that effort matters too. Higher involvement can sometimes create higher opportunities, but it also creates more responsibility. Both investments carry risk. Stocks can experience sharp short-term declines. Real estate values can also fall. Rental income isn't guaranteed. Markets change. Economies change. The key difference is visibility. Stock prices update constantly. Property values don't. That often makes stocks feel more volatile, even when both asset classes face risk. Long-term investors understand that temporary fluctuations are part of wealth building. The focus should remain on long-term performance, not short-term noise. If you're enjoying this breakdown, hit the like button and subscribe. We create weekly videos on investing, personal finance, and wealth-building strategies designed to help you make smarter financial decisions. Now let's look at the category that surprises many people. Here's the truth. The answer often depends more on the investor than the investment. Many successful stock investors become wealthy through consistency, regular investing, patience, compounding. Many successful real estate investors become wealthy through leverage, cash flow, and property appreciation. Both paths can work, and many wealthy people own both. That's the part many debates ignore. The richest investors often don't choose one or the other. They use both strategically. When discussing real estate versus stocks, which builds more wealth, the real winner is often diversification. For many beginners, stocks offer a lower barrier to entry. You can start small, learn gradually, and build experience over time. Real estate often requires more capital, more knowledge, and more management. That doesn't make it worse. It simply makes it different. The best investment is often the one you understand well enough to stick with, because consistency beats chasing trends, and patience beats excitement, almost every time. So let's recap real estate versus stocks, which builds more wealth. Stocks offer simplicity, diversification, and liquidity. Real estate offers cash flow, leverage, and tangible ownership. Both can create significant wealth. Both carry risks. And both have produced financially successful investors. The most important lesson: building wealth matters more than winning the debate, because the best strategy is often the one you can consistently follow for decades. And in the next video, we'll compare dividend investing versus rental property income to see which generates more passive cash flow over time. The answer may surprise you.